Hello, and welcome to another update video on PFE. Pfizer. Pfizer is regularly covered in the advanced and professional tiers of our stocks membership, and therefore today I wanted to take a look at it with you because it is at a very interesting location, possible trade location. Again, if you see it as a trade, that's up to you, but I'll tell you why it is potentially interesting. So first of all, I mean, what is Pfizer? What do they do? They're obviously one of the world's largest pharmaceutical companies. They develop and market a wide range of drugs, vaccines, including treatments in oncology, immunology, cardiovascular disease, and yeah, it is well known for vaccines of all sorts, as you probably know. They have gone through a massive boom during, let's say, the pandemic, and they are now in, you could say, still a normalization phase post-COVID, and revenues are stabilizing at more realistic levels. So, but the main question is, what is it interesting? After this correction, which started up here in 2021, end of 2021, is this maybe over? And it might not be over altogether, but there's at least some room for upside. And in addition, it's an interesting dividend payer. So we'll take a look at that as well. From an Elliott wave point of view, the main risk here on this chart, and I go to the 2-week chart, the main risk is that a large 5-wave move that started even before 1970 is complete. 1, 2, 3, 4, 5. I mean, I guess we can agree, hopefully, that this is a 5-wave move up. And the risk is that all of this is complete. All of the entire 5-wave sequence is complete. And we're coming down in a large correction. This could take a decade. Yeah, that's something that we need to consider. That's a risk that is very, very real. And you'll see the microstructures in a minute, but the risk is this was an A wave. We form now a B wave, so we could even in a B wave go higher before we come down in a C wave. And then this might only be a larger A wave again. We get a larger B wave and a C wave, so it might eventually extend this entire correction. But what I have to say is there is potential for higher prices. It's a bit more speculative, but look, yes, this was 3 waves up into 1999, a long 4th wave into 2009, and then a large rally into the 2021 highs. But it was a higher high, but it wasn't so high, that it would be, let's say, very clearly all of the 5th wave. So the white scenario shows the possibility of an extension, wave 1, wave 2, so that not all of the 5th wave completed here. I did point it out here as substantial top question mark. It might only be the wave 1 of that wave 5. We have then completed or are in process of completing a wave 2, and we could get a 3rd wave. No. So it could move like that. That would not even lead to unusual extensions. Standard fib extensions are shown here. A very common target for a 5th wave is the 61.8 extension, and that's at $217. I mean, look, we could realistically get there. The move up is not so extended that I say we have to have, we have all 5 waves completed. It's possible, so I mark it with a question mark. The problem is that the reaction to this support area here, I mean, you see the move down can be interpreted as a 3-wave move. So in the white scenario, the wave 2 might have bottomed, but I haven't got enough evidence here that this is the case. The move up is very choppy. Unfortunately, the upside reaction to the low in April isn't entirely impulsive. Bottom line is, this is a support area, and as long as we're holding 1638, the white scenario for upside extensions remains plausible. At the moment, this could also just be an A wave low and we're forming a B wave up. So from this area, either way, in both counts, I'm looking for higher. And that could be the start of a larger 3rd wave. That's not very clear. Or a B wave, which I have to say, based on the microstructure, it looks a little bit more like the yellow scenario at the moment. It is only a corrective rally because this is all super choppy and messy. I mean, look at the microstructures. There is nothing impulsive about it. There are a few ways how this could be labeled. For example, I can say this is 3 waves up in wave A. We have some kind of a B wave here, and we're now starting a C wave up. 1, 2, 3, 4, 5. Very speculative. I could also say maybe this B is still extending. So I think the microstructures doesn't make much sense to follow or focus too much on these. The nearest support area is here around $23. Breaking below it, I think, opens the door to at least a broader B wave. But yeah, all I say at the moment, I mean, there is some potential that the April low was a meaningful one and that we're at least trying to start a B wave. Maybe it's something more bullish, but I would need to see full 5 waves for that. So it's trying to stabilize. Look, this is not even much movement. It's not a volatile stock, which can be a strength in the portfolio, I have to say, especially if we consider the dividends. It's been trying to find a low in this support area for a year. I think the first time I looked at Pfizer myself was when it entered this support area more than a year ago. And honestly, it hasn't really moved much since then. But because of the dividends, it could be interesting because the thesis is that from this area, we're going to move up either way. That's the thesis at the moment, right? Obviously below the April low, we would need new evidence for a low, but the April low has potential to be a meaningful one. And even in the yellow B wave to the upside, we should see it move towards maybe $36 to $41. Now, let's also take a look at some of the fundamentals. If you're wondering where you can trade Pfizer, you can do that, for example, on XTB or with XTB. XTB is a globally regulated broker. We cooperate with them. The beauty is here that they basically operate worldwide. Unfortunately, not yet available in the US. But for me, it was important to partner with a broker who's really present worldwide, really globally in Asia, South America, in across Europe, and in very, very many countries. And you can even open different, let's say, portfolios or currency portfolios here, depending on where you live, which is interesting because then you can trade US stocks simply in US currency, for example. And Pfizer can be traded here. PFE. By the way, if you're interested in trying XTB, you can sign up, of course, completely for free. You can use the link in the comments section. If you do that, you support the channel because it's an affiliate link, so you support our project. But also at the moment, they have a promotion running where you could qualify for a free stock, free share, depending on where you live. That really depends on the country, but you can read through it. Maybe you can qualify and then, also use XTB if you like to. They have, more than, I think, 10,900 instruments that can be traded, futures, CFDs, and stocks, and Forex, and so on. Looking at the, it's all here, so looking at the financials, what I like is sometimes to have, good dividend-paying companies in my portfolio as well. Now, Pfizer is not a stock I own personally. I know not everybody likes Pfizer as a stock, which I fully understand, but again, this is not about that. It's a solid dividend-paying company, and the dividend yield is very, very high. And if we go to financials, you see that dividend rate of nearly 7% is really, 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 really high. And I wanted to talk a little bit here about the key facts, the financials. So we'll have earnings per share around 1.89. Yeah, that's EPS. They are certainly down from pandemic highs, but Pfizer is still profitable and stable, just no longer at the extraordinary levels of 2021 to 2022. We've got PE ratio 13. That's quite low. The market is discounting slower growth. Historically, Pfizer's PE has ranged between 13 and 18, and that suggests the stock is, let's say, at the lower end of the valuation, rather undervalued at the current prices. Dividend yield is nearly 7%. I mean, it's a very high and stable yield. Pfizer is known for paying consistent dividends, and the payout ratio remains sustainable thanks to quite large cash flows and manageable debt. We have ROE is 12.1%. That's solid for a large pharma company. It shows Pfizer is generating decent profits from its shareholder equity. And then we've got the debt to equity ratio, 0.3 to 0.4. Very healthy balance sheet. Pfizer has no excessive leverage and maintains flexibility to fund R&D, acquisitions, or even shareholder returns. Operating margin is 26%. Margins remain strong due to Pfizer's scale, patents, diversified portfolio. It indicates operational efficiency, in my opinion, even in a increasingly more competitive environment. So, I mean, my view is Pfizer is in a transition phase. I mean, the company made huge profits during the pandemic, and now the market is still correcting, maybe even over-correcting. That's why it's slightly undervalued. It's one of the strongest. I mean, that's kind of something that I know from my research. They have one of the strongest product pipelines in big pharma. Steady recurring revenues from existing drugs. And also they have an active strategy to rebuild growth through new acquisitions and new products. So, I mean, growth is slower. The fundamentals show stability and resilience, I have to say. At a PE near 13 and this nearly 7% dividend, I mean, you're getting paid to wait for the next growth cycle, essentially. The beta is 0.37, so very, very low volatility, right? Low volatility. That can be positive, though. It's not a company that's necessarily in the spotlight, but that's exactly what makes it potentially interesting from a value perspective. I mean, it's a defensive stock with strong cash flows, low debt, and it's one of the most reliable dividends in the industry. The numbers show a mature, stable business that's just kind of temporarily out of favor, not flavor. So, I mean, if you're looking for excitement, this isn't it. But if you're looking for income, value, long-term reliability, Pfizer does check the boxes. However, please don't forget about the risk that a major top has potentially formed. But even then, the chart has corrected since December 2021. So at least a larger bounce is likely. A larger bounce is likely. We were oversold on the weekly level, even here in April 25. We started to recover a bit, but we're far away from let's say overbought levels. And you see it here. If we go to the larger time frames, we're even here in, let's say, close to oversold on the monthly chart. So I'll keep you updated about this one. Hope you enjoyed the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested and want to stay up to date, feel free to join our stocks membership. I'll leave a link in the comment section and the description. It's the Patreon link because Pfizer is updated there sometimes as well. It's not too regularly. It depends on if it's requested in the higher tiers, but I do cover it every few weeks. So I mean, it's not very volatile anyway, so not too much happens. So hopefully that is valuable. Hopefully it added some value. Thanks so much. Bye-bye.